I want to talk about Apple. And the reason I want to talk about Apple is because, to Jake's point about wave 5 zones, it looks a little bit like Apple has finished its bull move for this cycle. And I want to look at whether that's likely true or not. Okay, so this is Apple's 5-wave cycle that starts 8th of April last year, Liberation Day lows, and it starts the move at 170 or thereabouts. Puts in a wave 1 up, 50% wave 2 down, so a typical muted sell-off for Apple. Puts in a pretty big, almost 2.236 wave 3 extension that peaks in December of last year at around 289. Modest sell-off, 38.2-ish retrace down into January this year, and then a big move from 244 up to an all-time high of 317. Now, these are the reasons why I think that Apple may have peaked at least in the near term. Number one, the volume profile. Okay, look up here. It's the stock is only up here briefly, but look at this volume spike right here. You can see it in the volume by price indicator here on the horizontals, and you can see it here on the verticals down here. So there's a lot of volume up here. Secondly, there's nothing scientific about, Elliott wave patterns and Fibonacci extensions, but these wave 5 termination zones aren't bad in their accuracy. They work more often than I would expect. And here we've got, a simple 5th wave termination zone projection, which is you start from the wave 1 low, extend to the wave 3 high, and then start at the wave 4 low here. And between the 0.5 and the 0.786 extension of that wave 1 to 3 place to the wave 4 low, very, very, very often is where these 5th waves terminate. And it looks like it might have done so. The stock dropped down through its 8-day moving average on Friday. Today, it closed just below its 21-day moving average. And so all the signs in Apple right now are bearish. And in addition, we have our, I would say, very early stage second derivative indicator down here, which looks at the acceleration and the deceleration of pricing. And this indicator thinks it's in an accelerating down phase. In other words, it thinks the selling is going to get more, not less. Now, this is no kind of science either. This is in its infancy, untested, but it's proving somewhat useful as an indicator to back up other methods. And so I look at Apple and I see a big volume spike right at the highs in this wave 5 termination zone, a drop through the 8-day Friday, a drop through the 21-day today, an accelerating downward analysis by our acceleration deceleration indicator. And all in all, I would say there's a good chance that Apple has topped. Now, that said, one should never write Apple off. And even if it does sell down some, it will find support at some point because it tends to be treated as a safety stock. So you'll see growth critics say it's overvalued, it doesn't grow, it doesn't this, that, the other, it doesn't have any innovation, yada, yada. But that's not the reason to own Apple. The reason to own Apple is it can be a very safe harbor in a storm. And so I'd be pretty surprised if it broke through the 200-day, which right now is sat at 265. So I would guess maybe up to 10% downside for Apple. And I think some caution is warranted.